What is good stuff, family? It's Ray J back with another video, and in this one I want to break down what's going on with Tesla stock, what you should be watching for moving forward. I want to talk about some very important levels to watch for, and why tomorrow is going to be another continuation of the reaction of the FOMC minutes that just came out. I want to talk about what the minutes told us about the Fed's policies, what's going on with all this data and news affecting Tesla, what you should also be watching for SPY, Nvda, the QQQ, and a couple of other tickers. Before I break anything down with all this information, before I get into any more details, let me just mention a couple of things. I'm firstly not a financial planner, so make sure you take none of this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And finally, don't forget about the Webull link. The offer ends in just about 5 hours, so check it out before they run out. If you deposit any amount of money into the account, you are guaranteed up to 12 free stocks. Once again, there are only 5 hours left. Anyways, now let's talk about Tesla. How on earth did today go? So I warned you guys in the morning, or at least a little bit before all this data ended up coming out, that we might see some crazy volatility with Tesla as we saw, the FOMC minutes come out. And what ended up happening was in the morning, right? We actually saw Tesla pump a little bit. We were talking about this pump yesterday, but it wasn't looking as certain during the pre-market. Then Tesla came right back down, and then we had the minutes come out like around this period. Tesla started pumping a little bit after the minutes came out. It dropped, then pumped, then got this big drop at the very end, going from almost 230 all the way down to about 224. That's a pretty big drop for Tesla. And Tesla ended up closing quite red, down over 3.16%. But the question is, will Tesla continue selling off like this? Although the technicals do look more bearish on the bigger time frames, one thing you have to remember is that the reaction is not always going to be this simple because of the fact that sometimes there have been times when Jerome Powell would speak, for instance, and the market would sell off when he would speak, and then the next day would start to rebound, right? Sometimes things like that could happen, and the real reaction could be kind of delayed because even though the minutes were technically more bearish for the markets in terms of the news, they weren't necessarily like a very surprising or like new piece of news. So you could argue that, the real reaction could come tomorrow, and it could be different from what we saw. So for that reason, I'm going to talk about what's very probable to happen to Tesla, and then some very, very important levels to watch for, right? If Tesla like breaks particular levels, we could see more downside. If it breaks, the opposite ones, we could see something very different. But before I talk about these levels and how this could affect Tesla, I need to talk about what actually happened today and all this data first. So what basically happened was we had the FOMC minutes that gave us more insights on the Fed's policies. Many of the Fed's officials are seeing some upside risks of inflation. They're talking about how right now, the unemployment numbers are just not looking at like what they want them to look like. They're seeing too much strength in the jobs sector, which is going to likely lead to more inflation in the future. Now, it's not just that, of course, but that's going to play a big role in their opinion. And looking at the current data, we're starting to see an uptick in gas prices. So gas prices are continuing to go up. Things are becoming more expensive again, and there are some signals suggesting inflation is going to start increasing during this summer period. Now, that's not really a good sign for the Fed, and the Fed is trying to prepare for this. And this is why the Fed is talking about more rate hikes to come. The Fed is being more hawkish. If the Fed keeps this up, this is going to be bearish for the stock market if we get another high CPI report. The Fed's logic here is the fact that consumer spending is relatively high, and as money is still moving the economy with this relatively high velocity, this is going to continue to help the prices remain as high as they are and keep inflation up. Now, with this amount of inflation continuing, the Fed is continuing to make these adjustments, and if the Fed keeps this up, this is not good for the markets. But I just want to remind you that Jerome Powell said all of this much earlier, so it wasn't really a big surprise to us. So I'm not 100% sure exactly how the market would react with 100% certainty or like with extremely high certainty. But I will tell you that we're going to watch certain levels and then see what ends up breaking or not. And also, we're going to be watching to see how on earth the market ends up pricing in other things. Now, the market ended up dropping at first, and we'll see if that continues or not. But what I'm going to be paying attention to would be this monitor right over here. We're going to be looking at the target rate hike probabilities. Will we start to see another uptick in this side right here for another rate hike, or are we going to see it maintain this high level? We'll find out tomorrow and for the days after that, because there is a chance that because of the Fed being hawkish, because of the Fed leading to more fear, we could see this start to go up as the market's going to start pricing in another rate hike for September. At the same time, the opposite could happen. We might not even see anything like that. So it all depends on tomorrow. Some important things worth mentioning about the markets, though, would be what we're seeing right now. Let me just start from the very beginning at the very top first. So the market used to be very greedy. The market was super, super greedy. Now it's becoming a lot more neutral and it's getting closer to the fearful side. Fear is increasing in the markets and the market is losing some strength. Greed is becoming less and less apparent in the market momentum indicators. Same thing with the stock price strength indicators and other things such as the McCullough Volume Summation Index. They're all showing signs that the market is losing more and more strength and greed is becoming less and less evident. The market's becoming more and more fearful. The put and call positioning right now is becoming more on the fearful side as we're seeing big investments being adjusted by these investors. And finally, the market volatility is starting to go into the extremely fearful mode, meaning that the market is losing lots and lots of that bullish grip it had previously. And we're starting to see sentiment shift in favor of the bears. Now, to add on to this, when it comes to earnings, let me just remind everyone that in the morning, Target was one of the biggest ones that came out. And they told us that, yes, they beat earnings this time around. Yes, they did. And that's why Target went up initially. But they told us that their guidance, their sales are going to likely decrease year over year. So they had to make a big adjustment with weak guidance. Now, we might see something very similar with Walmart. And this is just once again adding to the recessionary fears and the impacts of the higher interest rate environment. And this is very important to consider when it comes to the way we're looking at the markets. So if Walmart does the same thing tomorrow morning, this could be a little bit negative, a little bit of a negative factor. We also have like Dole coming out later on and Ross after the market closes. So just pay attention to those. I don't think they're going to be that crazy, but they're going to be worth mentioning. What's going to be one of the biggest pieces of data for tomorrow is not just the FOMC minutes, because it's going to have another effect on the market tomorrow as well, but also the initial jobless claims report coming out. We want more unemployment. That's what the market now wants. We want to see more unemployment. We want to see more pain in the jobs sector. We want to see a softening. Why? Because this is going to de-incentivize the Fed to continue to raise rates and to be more hawkish. If the initial jobless claims are lower than expected, this would tell us that the job sector is still too strong, and the market would not like that. We want this to be as expected or higher because once again, it's going to affect the Fed's policies. They keep talking about the job sector. The Fed also wants a reset in employment right now. They want there to be a big reset, and they're after this, and they're using inflation as the reason behind it. There could be other reasons too, but we're just going to look at that for now. It's very important to consider that. Now, anyways, looking at Tesla, we had some bad news that came out. This came out just about a day and a half ago and still is making the headlines that Tesla is continuing to cut prices in China, reducing the Model S and Model X's by from basically 7,400 to about 8,500. So we are seeing a lot of these cuts, which are pretty significant. And with this essentially happening, right, this is kind of concerning for many investors because in China right now, there's some fear of contagion amongst the banks. China is trying to make it seem like their banking sector is a lot stronger than it actually is, in my opinion. And when this continues to happen, investors and other individuals, even like everyday people, are losing faith in the banking system over there. So they're not really putting in as much money or storing as much money into the banks, which is hurting them big time. This is hurting the investments of these banks. It's leading them to lose a lot of money. And as more and more individuals over there start taking their money out of the banks, it's becoming very, very bad for them. There are also other demand issues that are going on there. We're not seeing them like keeping up with demand and also like the expectations of their data and things like that. So it's not looking too good over there. And with this happening, Tesla's selling a lot of their cars in China. This is bad news for them as well. This is part of why Tesla's selling off with all this Chinese news. Now, to add on to this, we also have this right over here. Basically, we saw some shipments of the Cybertruck. More of them are coming out for some more like crash tests. This is good news for Tesla because the Cybertruck is continuing to come out and we're seeing more improvements being made daily. So I'm very optimistic for it. Now, as far as Tesla goes, unfortunately, we dropped on high volume. 112 million was almost what the volume was. High volume selling is not good for Tesla because there's more aggression that is taking over. And when this happens, this tends to lead to more downside later on as well, which is showing some weakness. The price price ratio for Tesla is continuing to decline, showing more and more weakness as well. So all these different factors are pointing in the same direction. Price price ratio is dropping. Looking at the seasonality for it, it tends to be a little bit weaker on Thursdays, only green about 48% of the time, so a little bit less than average. And then watch it during the third and also during like the fourth and fifth hours of the day. during this period right here, we tend to see more volatility. But besides that, there's nothing else that's too crazy with it. The short interest has been going up just a tiny bit, but it's nothing too crazy so far. So it's very interesting to witness. But now let's talk about the charts. How are things looking from a technical standpoint? So the answer is bearish. We are looking more bearish on the bigger time frames. On the daily chart, on the 4-hour time frame, it looks like Tesla has more downside coming. But just to be safe, I don't want to make any promises about that for tomorrow. And here's the reason why. With these big events, a lot could happen. Sometimes you could see the market bounce because it drops so hard already. Sometimes the market could kind of like take everything in and just start reversing. Sometimes that could happen. That's why I want to watch these levels in particular. So for Tesla, if we're bullish, you're going to be watching 227 to be retested. If that breaks, there's 230. Get above that, then we have like 233.9. Then we have 235 above that. If we're bearish, we're going to be watching Tesla break below 224 and come all the way down to 221. If that fails us, there's 220, 217, and 215. I actually remember all these numbers. So what's more probable to happen to Tesla, though, based off technicals, though? Well, it looks like Tesla might try to actually push up during either the pre-market or during the open and try to retest around this like 225 area. If that breaks, then we have like 230 above that, and potentially even the high we made previously. There's a good chance it's going to make an attempt to bounce, but because of the fact that the trend is looking so bearish as it's continuing to make these lower highs, there's a good chance that we may see something very similar as today, where Tesla kind of like gaps up and pushes up a little bit, then it ends up getting a rejection off around 230 or so, and then it ends up coming right back down to retest 225. And you're going to be watching 225. Can Tesla hold that tomorrow? That's going to be a very important level. If it breaks, there's 224 flat, then the 221s could come quite quickly below that. So you have to be very careful. The most probable move is going to be either like it pumps in the pre-market, then it just starts selling off, or it gets like a open market open pump, then it ends up selling off after that. That seems more probable based off technicals, but just to be safe, okay, let's watch these levels very carefully. The levels I just named. 225 is going to be the most important support between 225 and 224. And for resistance, the most important resistance is going to be around 230. So watch these levels carefully, and we will see which way we end up moving. For SPY in particular, you're going to be watching resistance around this 440 area. If that breaks, then 441.3 is possible. The previous level I talked about previously, then we have 442 above that, and then 444 above that. If it breaks down below the low we have right here, you're going to be watching 438 as some support, but it's not going to be that strong. Stronger support is going to be close to like the 437 to 436.5 area. What seems more likely for SPY? Now, I went over the bullish and bearish cases. What seems a little bit more likely, there would be a small little bounce and a retest of about 442 or so. And it might actually reject between 442 and 444 and come right back down to these lows. And we're going to be watching, could we hold 439.39? If that breaks, it's going to come all the way down to most likely closer to like 437 in my opinion, because of this overall trend that developed on it, this low that was made like way back here a few months ago. I can actually go back on, I would say, like the daily chart just to show you on SPY. That is a real possibility and a risk. So we're going to be watching that very, very carefully. So make sure you watch these levels carefully. 437 to 438 is going to be another level, but 437 flat is going to be a very important support on SPY. So make sure you watch that carefully if you do break the low we make. So just watch for the test just to be safe. Looking at something like Aapl, for instance, Apple's not looking that great. It looks a little bit more bearish on the daily and on the 4-hour time frame. But if you're bullish, you want to see this thing break above 177.2. If that breaks, there's 177.6, 178, and etc. If it breaks below the low around 176, you're going to be watching 175. If that fails us, watch 174, 172.5, then 170. What seems more likely for Aapl? The most likely possibility would be an attempt to bounce right here, an attempt to bounce back up to about 177 or so, 177.2 to about 178, then a rejection around that range, and it coming right back down to about 175. And if that breaks, it could start sinking to like 174, 172, and etc. If it holds that, then it could try to base around there. We're going to be watching that test very carefully for tomorrow. That's going to be its important test. For the triple Q, we're going to be watching to see if this thing could retest 364. It might actually retest this in the pre-market or during open tomorrow, 364 to 365. Then we're going to be looking for a possible rejection. We'll see if that happens. The trend looks more bearish, just like Aapl. There's a good chance it could end up breaking down. So watch for a retest of that area, then a rejection. And then if it breaks below 362, you're going to be watching 361 as support, 360. Then if it breaks below 360, we're likely going to see 357 for it as the next major support. It looks more bearish, so the odds do favor this thing kind of like pumping than dumping. But just to be safe, let's see if it breaks below 362. That's going to be important support for tomorrow. For Nvda, If you're bullish, you want to see it break above 440. If that breaks, you're going to be watching for it to make its way up to about 446. Then above that, we have 452, then 460. If we break below 434, we have this very important zone down here. This is the level, I think it's actually on the 4-hour time frame. This is going to be the level to watch for basically. So if it breaks below 434, you're going to be watching support around 430, which is our basically our 200 EMA. If that fails us, then we have 425, which is the previous resistance becoming support right about here. And if that ends up failing us, then we have 420 potentially coming on Nvda. What seems more likely for it, in my opinion? Well, from a technical standpoint, it's looking more bearish on the 4-hour time frame. We might see a little pop to about 440 or so, then a potential rejection. Then we're going to be watching a 434 holds. If that breaks, 430 is on the table. It could even break even lower to like 425 to 426. Even 420 is a possibility. It looks more bearish to me from a technical standpoint, but just to be safe, we have to see how it reacts to the 200 EMA, if it holds above that or if it does break below that. So watch for confirmation, see how it reacts to 434, and see how it reacts to 430 after that. All right, so that's going to be very important. Looking at, let's just do a couple of others like AMD. You're going to be watching for a retest of 109. If that fails us, it could start sinking down to about 105. It looks a lot weaker than the market, so I think 105 is very probable. Maybe a small bounce to 108 to 109, then a rejection in 105 after that. For Netflix, you're going to be watching for a retest of about like 417 to 420. Could reject off here if we don't get a nice bounce. If there's no good news, then it might just continue sinking to 409, 405, 402, then like 400. One thing worth mentioning is it looks very bearish on the 4-hour time frame, so the odds do favor downside for it. So make sure you watch these levels very carefully. For the Nasdaq, looking relatively weak, we have a potential, bottoming formation that could be forming, not like a bottoming, but like a weakening formation. 33,300 is going to be a very, very, I'm sorry, 13,300 is going to be a very, very important level. We're going to be watching to see if that ends up breaking. If it does end up continuing sinking, we're going to be watching support right about there. On SPX, we had 4,400. If that ends up breaking, so we might get a little pop to about 4,432, reject off that area, then come right back down to this zone. If we break below 440, what is that, 4,400 flat, sorry, then we have 43.85 coming next on it. So watch that carefully if we do end up getting that break. A little pop, then a drop, then a retest of 440. If that ends up breaking, I'm sorry, 4,400. If that ends up breaking, then you're going to be watching that next level. The VIX looks more bullish as of right now, trying to break out, but we're going to be watching it to see if it can break 17. If it breaks that, watch 18. If that breaks too, it could keep going to higher levels finally after so long. The dollar also looks kind of strong, trying to break 103.5. If it breaks this, it's going to be bearish for the markets. If it rejects and comes down to 103 first, then we could see the market try to hold up temporarily. But the dollar breaking out could be another bearish signal, but we have to see it break 103.5 for more downside. Coinbase looks relatively weak. Look for a backtest of about 79 before it starts dropping. I would say 79 to 80 could be retested before this thing continues. If it breaks below 77.8, watch 76.5, then 75. But just to be safe, watch for confirmation. For Google, you're going to be watching for a backtest of about 130. If that breaks, 131 is on the table, but it looks a little bit less likely. I'm going to be watching 130. If that rejects, watch it come all the way back down to about 128. And if that fails us, we have 127.36. That's going to be the next level down there. And if that fails us, then 126 is another possibility. For the 10-year Treasury yield, this is also not looking that great for the stock market because this is continuing to push up. If it keeps pushing up like this would be another bearish signal. I want to be as honest as possible. We're going to be watching that tomorrow just for safety. Amazon looks relatively weak. Watch for a backtest of about 135. If it rejects off that, you're going to be watching it come all the way down to this previous resistance zone right here, becoming support. So around this 133 area, 133.5, around there. That's going to be the next support on Amazon. If that breaks, I expect it to come down to the 200 EMA around 131.8, and then it could start sinking lower. So that seems more probable based off technicals, but watch for that break just to be safe. If it breaks the low we made today, just for safety. Same thing with Meta. If it tries to hold this level, it could get a rebound to about 296 to 298. If it could get above the 200 EMA, this 298 resistance, it could start pushing back to 301 plus to 305, right? That seems more probable if it does get a break above the 200. But if it fails to break the 200, if it gets rejection of 296 to 298 and starts sinking. Watch this low at 293. If that breaks, it's going to come down to these new levels down here. We have like 290. We also have 288 and other low levels below that. But 288 is going to be the next major support to watch for if we do end up breaking. So watch these levels carefully. Actually, we also have supported 286. So 286 to 288 is going to be our support zone if we continue to break down. So watch these levels carefully. We're going to be looking for a back test of about 296 to 298. Let's see if it could break or not. If not, watch this low and we'll see if it breaks down or not. If it does break it, then we have lower support to watch for. All right. So thank you all for listening. Tesla does look more bearish from a technical standpoint, right? It does look bearish on the 4-hour and the daily, but remember, with these FOMC minutes and stuff like this coming out, you can't be way too certain just yet. So watch for some confirmation. See if Tesla could either get a gap up, or if it fails to do that, watch for like a push up by the time we open and see how strong it is. If it just looks really weak, it could get a big rejection off this 230 area or even lower levels and then start sinking even lower. If this low down here breaks, the low we made at 224, then there's going to be lower levels such as the low 220s, not to mention, we have like 217, 215 as possibilities of 220 breaks. All right, so watch those levels carefully. Do what you have to do. I really thank you all so much for listening. Have an absolutely spectacular rest of the day. Remain calm, cool, and collected, and I'll see you guys in the next one. Tesla in the market to the moon, as the long term is still incredibly bright despite these short term fluctuations. And peace out.